Hello, it's Adil bringing you a review of the European markets from an inter-market analysis perspective. Bringing you a weekend analysis for the 21st of March 2015 as to where we, or I think, or collectively the market thinks, or my interpretation of what the market thinks is going to happen. Okay. So we currently have, in terms of fundamentals, basically we have this conundrum, okay, and this theory, okay, and the theory is that there's an inverse relationship between the Euro USD and European equities, okay, given the fact that QE is now the game in town, okay. ECB obviously launches QE, etc. And the whole concept of QE is obviously it debulks the currency, it dilutes the currency. Obviously, the concept is that even though they claim to buy bonds and obviously keep interest rates low, I think the real stimulatory effect, obviously given the fact that borrowing costs obviously decline, is the double whammy of a lower exchange rate. Given the fact that global markets now, especially with Miss Yellen this week delivering the punch, or shall we say the left hook. If you, from a boxer's perspective, I mean, you could say jab, jab, left hook, and uppercut. Okay, and she really did deliver an uppercut because she took down the dollar. And as you can see with the dollar index, which I've already shown you a chart of in the previous video on the FTSE, it obviously had an H&S formation. We did retest the neckline, and obviously the market sold off again. In terms of dollar. Okay, so she's obviously attempting to talk down the currency. Now every central bank in the world is trying to do this. Okay, it's not just the actual the FOMC or the ECB. I mean, you also had commentary out of the BOE this week, and even they were very dovish in terms of talking down their currency, etc. And that obviously sterling hit a new low as well. Obviously, you've had Turkey cut rates. You've had Israel also attempted to cut rates. So it's a global phenomenon. So at present, it's all about the currency. It's a currency war, full stop. Okay, and that's one of the reasons why I think personally, given the fact that it was a firewall for Greece, obviously QE, which obviously has served its purpose because it has protected the European markets from a sell-off and from fear and uncertainty gathering, and it's created a firewall from the Brexit concerns. Okay. Not only that, obviously, it's helping the European Union in terms of their exports, which eventually will be revived. That creates more jobs, etc., and obviously higher disposable income, the wealth effect, the trickle-down effect, call it what you want. So now that we've assumed or come to some sort of assumption that, or we've come to this theory that a higher euro is negative for European equities, and a lower euro is positive for European equities. So if that's the basis on which our thought process is working on, then given the fact that the H&S formation has completed, therefore one would now have to presume or come to a conclusion that the euro is now going to rise, and if the euro is going to rise, that's going to be negative for European equities. Okay, and that's the reason why you can see the DAX languishing. Okay, you can see the DAX languishing. Now, the DAX has been very weak from my perspective for the last 2 to 3 days. Okay, given the fact that the Nasdaq obviously has moved higher, given the fact that biotechs and semicons have now pushed higher, given the fact that the S&P has pushed higher, the FTSE has broken 7,000, the DAX did not make a new high. Okay, it's making a lower high. This is a worrying concern on increased volume as well. As you can see, towards the close, there was an increase in volume. Now, the other concern obviously is Greece. Now, if the euro goes down due to Greece, that's not going down because of the fact that dollar is obviously depreciating. Or sorry, dollar's appreciating, sorry, in terms of economic strength in the US dollar. It's more to do with fear and uncertainty, and that's negative for the markets. Now, as you can see here with the Financial Times article on the weekend, those of you that want to read it, there's an article, very good one, with regards to Greek bailout summit ends in disarray. Greece's Prime Minister and fellow Eurozone leaders emerged from a meeting early on Friday morning touting a breakthrough agreement to unlock much needed bailout funds for Athens, only to fall into disagreement hours later about what it all meant. Okay, so the uncertainty etc. factor is certainly there. 2 days of intensive occasional heat negotiations, etc., etc., etc. Then also hailed a definitive agreement 2 months ago. So similar were the two deals that, much like the one finalised last month, lenders were involved in the talks could not agree on what was agreed within 12 hours after a late night meeting aimed at resolving all differences. Athens obviously is facing this credit crunch, which everybody is in reality. It needs fresh resources, etc. And a €1 billion revenue shortfall in the first 2 months of the year, according to Athens. At the centre of the dispute is what reform Athens must take to access $7.2 billion in rescue aid, and how Eurozone's leaders can verify that Greece's radical anti-austerity government is actually implementing them, which, to be honest with you, is certainly not being implemented. Miss Merkel made clear at a post-summit news conference that the starting point for Mr. Tsipras, Greek Prime Minister obviously, was a December 10 inventory of incoming or incomplete reforms promised by the previous Greek government. This is the punchline, by the way, so I'll repeat this again. Alex Tsipras, Greek Prime Minister, was a December 10 inventory of incomplete reforms. So basically there's 10, the list of 10 apparently incomplete reforms promised by the previous Greek government, which haven't been completed. So they're back to square one, even though they claim that they're going to be an anti-austerity party and so on and so forth. Miss Merkel is asking them to go back to the previous 10 inventory of incomplete reforms. So going back to what the previous government was of Mr. Samaras, the Greek government has the opportunity to pick individual reforms that are still outstanding as of 10 December and replace them with other reforms if they have the same effect. It is a potentially incendiary demand, since the document Ms. Merkel referred to, a letter written by Greece's then centre-right Prime Minister Antonis Samaras and his Finance Minister Gikas, whatever his name is, it's really hard for me to pronounce, I do apologise. Hardouvelis, apologies if I've said that incorrectly, was the focus of particular scorn for Mr. Tsipras, far-left Syriza party on the campaign trail, etc., etc. So we're basically going back to square one, and nothing really has been, there's no achievement, no progression, nothing from my perspective. All that basically shows you is that they're still debating and arguing between one another. That's all it shows you, okay? So, given the fact that Greece is still an uncertainty, given the fact that the euro has stopped its rot of continuously falling, and that QE certainly has an obstacle now with regards to the US dollar, given the fact that Miss Yellen now is attempting to debauch her currency and isn't as hawkish as everybody expected, and there's a possibility that this could be neutrality. And given the fact that there's no more debauchery in the euro, therefore no more debauchery, therefore no more discounting in the future, so the DAX has it top for now. That's the question that we all need to ask ourselves. Okay, so it's going to be very highly dependent on all the economic data that comes forward, but we just have to respect that for now, given the fact that there's no real progress that's been made in Greece, even though they do have access to that $2 extra billion of funding, but even that has strings attached. So it's going to be very interesting as to what happens from Monday onwards, given the fact that there really is a lot of bickering amongst them. So that certainly is a factor. Okay, that certainly does play a factor. And given the fact that we have the US markets now coming into resistance, which I'll explain in the US markets video, we may well see weakness and a rally in the euro as a result, given the inverse relationship, okay, from a fundamental perspective. Okay, so that's fundamentals covered now, given the fact that it's all about the Euro USD. Now we can bring up a chart of the Euro USD and let's see exactly where this stands. Okay, so let's go to a daily chart here for you. Okay, so obviously you can see this bullish engulfing candle and the market's consolidating within it, and we could certainly be attempting to push higher back up to that 1.10 level that we touched last time. Okay, 4-hour chart at the moment certainly has put in a potential pivot low here, no lower lows. That certainly needs to be respected for now, and there's a high probability we could test to go back up to that 1.1 level. 60-minute chart does seem to be in potential resistance for now, but we just have to respect the move, which has been quite impressive. Okay, very, very impressive this move has been. Okay, so that certainly needs to be respected as well. Okie dokie. That's where we stand with regards to the euro, and the support at 1.06, 1.07 will hold for now. Therefore, it's very hard for European equities that are struggling to make a new high, especially the German DAX. Okay, let's go to the DAX, and that's the main instrument for me to observe. Daily chart, as you can see here, still in a bullish channel, but there's a real danger and a threat of this channel breaking to the downside. So that certainly needs to be observed. 60-minute chart has a H&S formation. That means it's bearish for all European equities, given the fact that the German DAX is a leader, and that's showing weakness. Okay, 10-minute chart of the German DAX. Again, we have propelled higher. We certainly have propelled higher. You have an unfilled gap below there, so watch out for that potential gap below. Okay, that's the gap that we're going to be focusing on for now, and that gap certainly needs to close, given the fact that we have this formation at the moment. Let's just draw this in, bear with me. Okay, there we are. Okay, so that's basically where we stand with regards to the German DAX. Okay, and a potential look for a potential gap fill scenario playing out here, which is the gap on the DAX at the moment is around the 11,900 level. Okay, especially given the fact that it's been lagging as well, so that's going to be very interesting. Okay, so let's go to the French CAC now and see exactly where that is. Daily chart has been impressive, has certainly pushed up higher, but we are into the upper channel resistance. 60-minute chart, yes, we've made a new high, so it certainly needs to be respected. As you can see, the French CAC is certainly more stronger compared to its German counterpart. Okay, that's mainly because of the economic data that has come out relatively weak as of late. Okay, so you've had a breakout there, looking for a potential move. Now, obviously, initially the press conference was perceived as being bullish, and that's why the markets continue to short squeeze higher, regardless. But given the fact that the news flow that's coming out after the event, or after the actual appointment, or after the conclusion of this summit, certainly doesn't bode well. So therefore, it would be interpreted as being bearish. So one needs to be extra cautious. Okay. 10-minute chart, obviously, as you can see here, very impressive move higher, higher highs and higher lows. So one can't get excited on the downside. Okay, but one needs to be aware that we do have this bullish channel, which is obviously very, very vulnerable to potentially breaking down, as we can see with regards to the German DAX, given the actual increase in volume in the sell-off. Okay, the Euro stocks, we can observe the Euro stocks now and see exactly where they are. You've had a failed H&S formation. Why do you have a failed H&S formation? Because the uncertainty and the additional variable that was added, i.e. the Greece getting access to 2 billion in short-term liquidity, potentially to create jobs, etc., and also that has strings attached. That obviously sent the Euro stocks higher, regardless of the bearish news after the actual summit or conference. So that this may well be a perfect catalyst for a fake out. That's basically how I'm interpreting it, and that's how I'm reading the markets at this very juncture. A potential catalyst for a fake out. Okay, but at present you have to respect the price action. The price action is higher highs and higher lows, and we'll see exactly how the markets transpire come Monday. Okay, but my focus is purely at this very moment in time is on the German DAX, and that has a H&S formation, and that's lagging. It should be leading. And whenever index fails to lead, then that is a warning sign with regards to the index itself. And we may well see a reversal on the German DAX, which will send the European markets down as well. Okay, so that's going to be quite important with regards to, like I said again, understanding the markets and seeing which way the direction is with regards to European markets. Now, bear with me. Let's just have a look here. Okay, just bringing up my chart, our economic data, especially with regards to last week, and this is going to be interesting. Okay, so the economic data out of the Eurozone itself, especially with regards to producer prices and inflation data overall with regards to the Euro, was starting to pick up and starting to improve slightly. Okay. And the US data has been relatively weak all week, so that certainly isn't a good sign. And it's going to be interesting as to how the Asian markets react now with regards to the actual close on Friday, and the S&P 500 as well, and that should hopefully give us another clue as to which way the market wants to go. The Euro stocks, the CAC, certainly showing very, very impressive price action on the upside, but the DAX is certainly lagging and that isn't a good sign for potential growth going down the road. So again, it's every trade at a time and every day at a time. That's what trade traders do, and the buyers can certainly be vulnerable to changing in an instant, okay, based on news flow. So risk on, risk off, wax on, wax off. Goodbye now.